Hello and welcome to my next NAP. NAP stands for Nonprofit Auditor Points, and I'm your nonprofit auditor. My name is Irina Oishkova, and I'm auditor with a small CPA firm where I'm a partner located in downtown Oakland. We serve nonprofit community, and I developed these NAPs to give some support, provide some explanation and guidance to nonprofit management board and other leaders in nonprofits community to better understand financial statements, audit process, some accounting issues, and answer some board questions. These videos are not authoritative, they just my personal experience that I'm sharing with the nonprofit community based on my many years of experience, where I start with Deloitte and Touche and many years to run my own CPA practice. Let's start. In my previous video, I discussed that at the end of the audit, auditor provides 3 letters to the management and the board. And those 3 letters are, number 1, management representation letter, number 2, communication to the governance or board letter at the end of the audit, and number 3, recommendation letter. Management representation letter we discussed in our previous video. In this video, we're gonna discuss communication with those charged with governance at the end of the conclusion of the audit, at the end of the audit. So this is letter to the board. Let's start. Okay. In this video, we will talk about communication letter to the governance at the end of the audit. And we're gonna understand what that letter means, how to read it, and what action board needs to take as a result of that letter. So first and foremost, let's talk what is the purpose of that letter. The key elements of the letter is to communicate. This is the letter by the auditor, prepared by the auditor to the board, where the auditor needs to communicate to the governance about any significant audit findings that include material weaknesses, significant deficiencies, also any accounting policies, change in accounting policy, any significant estimates, any disagreements with management, if there are any, and other significant issues that auditor could have encountered during the audit and believe that governance needs to be aware. Governing body, which is a board, is the highest level of authority inside the nonprofit organization. Therefore, auditor typically communicates only really significant issues where the board needs to take an action or be aware as a result of the audit. On the screen, you can see the example of the letter. Let me make sure that you understand how to read it and where to put your attention to. So first of all, you do see the name of the letter, and this letter should be provided for every audit at the end of the audit. The date on the letter should be the same date as the date when the audit report was issued. You can see several dates here. The first date is September 30, 2023. This is the year end for which audit was done, year end. But this is when the audit was finished. And then the third date is the date of the engagement letter. That's the date when engagement letter was signed for the year ended June 30, 2023. September 30, 2023. And that's when the audit was finished. 3 different dates. Very important. As I indicated in my previous snap, all 3 letters and audit report have to be dated in the same date. Report, management representation letter, communication to governance, and recommendation letter. They all need to have the same date. So in this letter, you can see that we as an auditor representing to the board that we audited financial statement of the organization for this year, and we issued an opinion and report dated, in this case, August 12, 2024. You can see that the same date. And we indicated to the board that we completed all the tasks that you hired us, auditors, to do in the signed engagement letter that we signed on May 20, 2024. And we're telling the board now we're communicating to you the significant results of the audit. Okay? So let's see what we're communicating. We're communicating that, just to remember that management is responsible to use appropriate accounting policies, not auditors. It's a management responsibilities. And we, as an auditor, presented the significant accounting policies in a footnote to the audit report number 3. Why? Because board needs to know what accounting policies are used by the organization. So we telling the board, take a look at the audit report. These are policy. We're also telling the board there's no new accounting policies were adopted this year because it's significant. If there are any new accounting policies were either adopted or there was a change in accounting policies, it's very critical because it will affect financial statements and auditors will indicate it here. We also indicated that we as auditors noted no transactions entered by the organization where we find that was a lack of guidance or consensus, meaning that we did not, auditors, identified anything during the audit where we believe there were not authorized transactions. And we also believe that all significant transactions have been recognized in financial statements. In financial statements. So, my apologies for this wiggle line. We're also telling the board that part of the numbers recorded on the report is management estimate, accounting estimate. And those typically depreciation, expense, in-kind, revenue, those are estimated. And we just have to remind the board, those are management estimates. We're also telling the board there's some footnotes on our report are significantly sensitive to the management estimate. Therefore, we're pointing the board attention. Please take a look at those specifically because management estimated those numbers. And we're saying the most sensitive estimate was allocation of functional expenses. And that's a statement of functional expenses. In my opinion, this is the most common estimate in nonprofits, and the board has to understand the methodology that the organization uses to allocate expenses between program, fundraising, and administrative, which is the statement of functional expenses, and this is one of the significant estimates. And as we discussed in the previous videos, that statement is very highly used by rating agencies. And typically, percent of program expenses should be between 70 and 75. That's the percent that a lot of rating agencies are looking for to assess effectiveness of the organization. Again, this is the most common estimate, and we're pointing the board attention that they have to look at that estimate so they understand what the methodology was used and review that methodology and estimate to make sure it's reasonable. We're also telling the board there are some footnotes on the report that are very important because either due to materiality, because it's a big numbers, or it's just very maybe new guidance, maybe something very significant about it. And for this client specifically, we're saying it's disclosure about endowment. The organization has endowment fund, meaning net assets restricted in perpetuity. So, and it's in the footnote 12. So therefore, because there's a donor created endowment fund, we're saying it's a very critical for the board to be aware that these funds are restricted in perpetuity, and please take a review of that footnote. We're also presenting to the board that we did not encounter any significant difficulties dealing with the management. If the auditor encounter any significant difficulties talking to the management, obtaining information, and so forth, this would be presented in here. We're also indicating to the board that we, during the audit, came across of several adjustments, corrections, and management has corrected all such misstatements. And none of those misstatements were material. So meaning we did came across of misstatements, but none of them were significant enough or material enough. Very often during the audit, auditor will identify significant material adjustments. Then the auditor will be presenting here to the board. Please pay attention, because those adjustments not just trivial, they are material, and the board needs to be aware. Disagreements, we're also indicating to the board we did not have any disagreements, and we're confirming to the board that at the end of the audit, again, you can see the same date, August 2022, right here, August 2012, August, see the same date, that we obtained the management representation letter, where the management represented that they provided all information to us honestly. They're not aware of any fraud, dishonest behavior. They did not hide any information to us. And that's very critical. We're also indicating to the board that management can consult with other accountants and auditors and obtain second opinion on our audit, but we're not aware of such consultations. We're also saying to the board that we already discussed this issue with management and they're aware of them. So you don't have to, but as a board, to performing your own due diligence and responsibilities, due care, the board needs to be aware of those issues and act upon them. The board members have to read, understand that letter. If they don't understand, they need to contact the auditor and obtain clarification. But based on the letter that provided, the board member would need to review note 12 about endowment, make sure that they understand. They need to review allocation of functional expenses on the statement of functional expenses to obtain understanding of methodology of allocation. The board needs to get familiar, read and understand footnotes 3 with the significant policy that organization uses to record cash and cash equivalents, investments, fixed assets, and revenue, and so forth. And finally, the board, if there is no any other issue, the board will be content and hopefully at the end listen to the presentation of the report by the auditor and ask auditor if they confirm there is no additional issues that they are aware of. And that's communication with the governance at the end of the audit that auditor has to present to the board members, and every board member is responsible reading, understanding, and acting on that letter. Thank you so much. Thank you for listening to me. And in the next NAP, we will be talking about management recommendation letter, the last out of 3 letters. Thank you, and have a wonderful day. Talk to you soon.